Okay, I'm still setting things up. So give me a moment on that. All right, hey there. Hey there. How's everyone doing? How's everyone doing? I think it's been a while since I've seen you guys or have done a webinar for IC markets. So yeah. So I'm the Wyckoff guy, the guy that actually showed you guys how to do the Wyckoff strategy. And I also do the smart money concepts. Okay, let's give it a moment for the others to join first before we begin. Okay, so yeah, at the moment, we actually have Alan in the chat, we have Ash, we have Charles, we have Data Prasad, we have Henny Chandra, we have Hilton Fisher, we have Moses Richard, we have Peter, we have Robin Shackle, we have Rogin De Leon, we have Sumit. Hey, I'm good, Moses Richard. Hey, hi there, Sumit. I'm doing good. Hey, hi there, we meet again. So yeah, this entire month, I'm just going to update you guys so for just being very honest, I'm very open with my personal trading account. So the entire of last month, I'm up 2%. So I'm actually risking very low, hence the 2%. I'm not risking 1% per trade. I'm actually risking roughly 0.2% per trade. So in this week, my aim is roughly 1% a week, roughly something that is very doable. So at the moment, just of today, so Monday, Tuesday, I'm up 0.6% this week. So I got 0.4% more before I hit my weekly target. Okay. So yes, I'm still setting up the trading view. Do apologize for that. Oh my, I just turned it off. Okay. Setting things up. Okay. Hey, good morning, Charles. Hi there. Okay, let me get everything out. Okay, today we'll be going through another IC Markets webinar on trade management. So I'll be going through part 1 out of 4 on the stop loss, take profit placement. Okay, let me drag the attendees out. Hey, hi there, Ash. Hi there. I see you're very excited, all caps. Hey, good day to you, Jamilu. Okay, so I got to read the disclaimer first before I begin. So any information conducted on this webinar should not be construed as advice and is represented as educational material only. So the contents of this webinar and any accompanying material are not intended to be a solicitation of funds or a recommendation to trade a financial product. So any opinions shared by guests, which is myself and speaker, also myself, of the webinar does not necessarily reflect the opinions or view of IC markets. Okay, let us begin. So just a few topics to cover today. Okay, where is I'm not sure why the pen is not coming up. Okay, there's an issue with the pen. Oh, why? Okay, got it. Okay, a few topics to cover today. Anatomy of a trade. So I think last week Jindal has already ran through with it with you guys. So I likely will do just a very quick trade, a very quick recap on it. So problem with a fixed stop loss and a problem with a fixed take profit target, proper stop loss and take profit placements, dynamic stop loss and take profit placement. So introducing myself. So yeah, my name is actually Chen Yongjing. I'm an external analyst of IC markets. I'm actually from Everest Fortune Group. So we are an award-winning research firm. So we are also the technical analyst award finalists for the best forex and equity research for 2019, 2020, and 2021. So right now we actually have a very special collaboration with XM where we are bringing you guys the very good stuff. So let me just send one link first to the chat. Okay, let me get it out. Okay. So we have the, wait, give me a moment. Okay, I'm just trying to get this link out. Okay, give me a moment. So by the way, if you guys, I know some of you guys want to contact me outside of this webinar, want to talk to me on TradingView, you guys want to find me on the IC Markets VIP server, you guys can actually contact me via this area. Let me just send it in. So feel free to contact me via the link which I just sent to the chat. Guys can check it out. So it's actually just a very, very quick portfolio about myself. Everything is free. Feel free to contact me there. So yeah. Hey, hi there, Kelvin. I think it's been a while since I've seen you too. Okay, let us begin. So anatomy of a trade. So first off, we have the entry. Hey, good morning, Simon. First off, entry, I'm sure everybody know already what's an entry. Buy or sell, stop loss, where you want to close out your trade automatically if the trade doesn't go to your right direction. So we also have the take profit area. Take profit area where you want to take your final take profit. So there's also a take profit 1, take profit 2, take profit 3. It's up to you how many take profits that you want. So for me, I personally do not hold my trade until the final take profit target. I usually close out, honestly, I close out midway. Okay, I will answer your question in a bit. So I usually close out my trade midway when the trade is about to hit take profit. So like today, I actually took a trade on euro dollar, just going a quick recap. Okay, let me just log in. Okay, let me load it out. Okay, so today I actually took a very, very nice trade on the euro dollar. I waited for the entire day until the London session before I took the trade. So this was the exact trade I want to share with you guys. So looking at the daily chart, price is very, very bearish. Hey, hi there, Kelvin. Hey, Sumit, I'll answer you in a bit. So if you notice, price was in a very, very bearish momentum. So we have a retail pattern, the 3 black crows. So what happens with the 3 black crows? Bearish momentum is expected. Your buyers for the day should be bearish just by looking at these 3 candles. So where was my take profit target? Since I was using smart money concepts, so we have something called a breaker block and order block. There are many names for it. So this was my take profit target. This was the last bearish candle before price broke structure, and I expected price to come back down to that area. So if I actually just move it straight across, it's a pretty nice overlap support. So I'm using all kinds of terms so you guys can understand. So price actually came down to my take profit target, but I closed it out early. So moving on towards the 1 hour chart. So we actually have the Asian session. So the Asian session is from 7 p.m. up to 12 a.m. New York time. So over here, right here, up to here, we have the, okay, let me just blue. Okay, we have the Asian session up to midnight. So what I noticed on the 15-minute chart was that price actually took out liquidity right here at the very top of the Asian session. Price took out liquidity. Let me just get the words out. So sorry, liquidity. Okay. Okay, price took liquidity right there before breaking market structure. So this was my point of interest that I wanted price to break. But I actually had an early entry. I did not wait on the 15-minute charts. Instead, I actually went down towards the 5-minute charts. So for those of you guys in the IC VIP room, I do not just write the analysis and then I just, don't trade it, just leave, just relax. No, that's not what I'm doing. When every time I send an analysis, I'll be looking to trade it, really trade it out on a personal account, on a live account. So what happened? Price actually broke structure right here. So very, very nice. It actually broke structure already. Then I was looking for shorts. So if I draw a line, I draw a line through, I draw a vertical line through, you notice that this is the start of the London session. So just remember, I only take my trades during the London session or the New York session. So the moment London session began, I started to look for shorts. So I went towards the 15 minutes time frame. Then I noticed the fair value gap or the market imbalance zone right here. So this was an area that I was looking at very, very closely. 15 minutes, so it looks like that on the M5 chart. So I'll just write it out. M15 inside right. Okay, M15 fair value gap. So next I actually entered right here. Short position entered right here the moment price stepped in. Stop loss above the high right there, risking 7 pips. And then I aimed for the daily order block right there. So I'll just write it out, daily order block, a breaker block, overlap support, all kinds of words, all kind of fancy words you guys can use. Is the same thing. The same thing to me. So yeah, entered right there. And then where did I close it out? Very, very honest. I actually closed out the trade right here. So in the end, although it hit my take profit targets, I close out here. Why? Because to me, this is a liquidity hotspot. So we actually have a relative equal low right there. What I was very, very afraid of, the volatility in the London session, price could possibly just tap and then reverse right back up, hitting my break even. So I'm not going to risk it. I'm not going to take any risk regarding that. So the moment I see liquidity, I close out my trade. That will be the end of it, end of story. So I exited the market there and just relaxed, just waiting. So now here am I. So in the end, my trade was 1 to 2.24 risk to reward. Okay, Sumit, you actually asked to share my LinkedIn profile. Well, no problem. LinkedIn.com/. Okay, I should get the. Okay. So my LinkedIn profile is right here. If you want it, I just sent it to the chat already. Feel free to check me out there. Give me a follow. So for now, I actually only see names. Like I see you guys' names on the chat. I do not. Maybe when you follow me, I'll start to like get a rough idea of how you guys look like. So it wouldn't be like anonymous, just having a name on the screen. So yeah, feel free to chat me up on LinkedIn. Feel free to follow me. Okay, that will be just a very, very quick trade recap. Done. Let's move on to what we are all here today. So break even, just now I did mention, if I did not close out my trade and the trade reverses back up, what happens? So my sell entry, oh nice, very, very nice, price hit it, comes back down, and over here I set the trade to break even. So my stop loss, I set it slightly below where I sold. And then what if price bounce back up, hits my break even, I wouldn't make any money. And then likely it might affect my psychology, it might affect yours, because your trade idea was right. You were waiting, sitting there very, very patiently waiting for the trade to happen, and you did happen, and you did not take profit, did not take partials. So this is the reason why. Remember to take partials, take profit 1, take profit 2, take profit 3. So take profit 1, what can you do? You can close out 50% of your trade. Take profit 2, close out the remainder 30%. Take profit 3, let the remaining 20% run to the final take profit or break even. Partial profit, very, very important. Well, trailing stop, you have the on MetaTrader 4 on the desktop. You can actually set the trailing stop, so every time the trade moves higher, your stop loss will be automatically adjusted higher and higher. So in the event price comes back down, it should hit your stop loss, and you should be making this X amount of money. So your break even will be higher and higher every time it does not move lower. Okay, next, idea invalidation. This is a point that a lot of people just totally ignore it. They will be thinking, what is idea invalidation? I do not need it. When I enter a trade, I let it run. So you cannot have that mindset of, I have an idea, I sell, I buy, I leave it to run. It should, you have the idea of it should technically hit my take profit targets. I do not have to manage because I'm doing a swing trading. You tell yourself I'm doing a swing trading. I'm just letting price do its thing. So even if I am holding a very, very long trade, so to me a long trade, intraday trade, would be around 50 to 100 pips. That's quite a lot. So I would be managing it along the way. So how do I manage it? Let me erase all the ink on the slide. So I'll be focusing on this now. Idea invalidation. Let's say, for me personally, using smart money concepts, if price, this was my buy entry, so price somehow went up, tapped into my buy entry, buy limit, continues going up. So you notice it's very, very nice. The market is following a very, very nice order flow. And then what happens? Price all of a sudden, wow, smash down. It caused a break of structure, a market structure shift, a change of character before it retraced back up. So at this point, the moment structure is broken, it's my idea invalidation. So I realized the market might already change direction. So either I close out my trade completely the moment this happens, or I wait for the retracement back up before I close out the trade. What happens if I don't? If I don't have an idea invalidation and I did not spot this specific scenario? Price starts to go down and likely hit my break even. My stop loss, like hitting it, will not be making any money. You'll be quite annoyed. Wouldn't say angry, probably annoyed. Wow, I should have closed out a bit, but then right now hit my break even just because I did not have an idea invalidation. So this is very important. It varies accordingly to everybody's trading strategy. So another example for an idea invalidation using the RSI. So let's say you are in a buy. You're in a buy, taking a buy up. So you have an RSI indicator on TradingView. So we have a line above 70, it's overbought, below 30, it's oversold. So in the buy, moving very, very nicely. What happens? Wow, all of a sudden, price is above the 70 RSI marking. So in your trading strategy, as long as price is above 70, it means overbought. So what do you expect if that's your trading strategy? You expect price to likely come back down, right? So in such situation, you can just close out your trade completely. Close out your trade completely, taking profit just in case price decides to start selling towards the oversold area. Okay. Hey, hi there, Desiree. So yeah, I think if you have any questions, Desiree, I know you have asking me some questions on the IC Markets VIP chat. Hey, hi, feel free to continue asking. I'll try my very best to give you guys a detailed answer. You guys can actually DM me, direct message me on the IC VIP chat. I'll try to, if you send me a chart, I'll try my best to get back to that specific time frame, this specific time, and try to, give an idea, give an overview, give my opinion on your trade idea. Okay, let's move on. So problems with a fixed stop loss. Okay, a problem with this, we have let me check it out. Okay, we have a nice support area. So right here, very, very nice support. So we want to take a buy entry, stop loss below, because we think it's a very, very nice support. The moment we set a support there, what happens next? Set a stop loss there, I mean SL. Stop loss there, price actually went down to hit our stop loss. So in my opinion, this is just a personal opinion. As I mentioned, smart money concepts, what happened when you see two relative equal lows? You expect price to clear the low, right? Clear it down before waking back up. So it's clearing out liquidity, sweeping liquidity. So an area like that, I would not be looking to put my stop loss there. So an ideal stop loss, you can likely put slightly below the liquidity zone. If you guys do not use smart money concepts, you guys see this relative equal low, just play it safe, stop loss few pips below, maybe 5 pips below the relative equal low or the support area. Or AJ, there's this time frame doesn't matter. It can occur on even the 1 minute, 5 minutes, then 15 minutes, 30 minute charts. Time frame doesn't matter on it. Okay, Jack Zola, I will answer your question in a bit. Give me a moment. So I'll mark down your question. Later I'll answer you. Okay. As mentioned here in this PowerPoint slide, price tends to get attracted to key levels of support and bounce off them. Also, same thing, price is attracted to liquidity. So liquidity concepts is very, very important. If you see right here on this chart, there's relative equal lows. Just showing another example. Look right here. Relative equal lows. The moment price cleared the low, it immediately reacted strongly, bouncing right back up. So this actually explains why I just now close out my trade early. If you are in a sell, I usually close out my trade at the first liquidity hotspot, just in case this bounce. I do not like to hold my trade through this disgusting bounce. I don't know whether it will hit my break even or will it continue going down. So to remove any doubts, to remove my mind from the market, close out the trade, target for the day hit, just relax and do other hobbies. I'm not a slave to the market. I will not be sitting down from morning Asian session, London session, New York session, just watching the markets. That's what I did in the past. In 2019, 2020, I would be sitting in front of the chart from Asian market all the way to the New York market, just hoping to find a trade. So it was a very, very tiresome, roughly 16 hours. So it's from 7 a.m. up to 10 p.m. at night. So it was a very, very long, tedious process. I was very, very tired of it. Okay, just before I move on, just now I mentioned already, place your stop loss slightly below the liquidity hotspot or below the key supports or resistance level. Okay, problem with a fixed take profit. This one I kind of agree. I've seen it happen a few times. Okay, so right here we have a relative equal high. So for many traders, you'll say, oh, there's a resistance, price failed to break through. So we might likely see price go up and then rebound back down. So what happens next if we have our fixed take profit right up there? Price goes very, very closely towards the resistance level, towards the liquidity hotspot, and it doesn't clear. Then it gets very, very annoying. Then you will be thinking, oh, I use liquidity concepts. There was relative equal high, relative equal low. Why didn't it bounce? Well, good news for euro dollar. Okay, this is just an opinion. This is just my personal back test. Let me find it. Okay, this chart doesn't have it. So sometimes I see in this situation we have some kind of relative equal high. So this would be a very, very ideal take profit target that we are looking to take to clear out. So we take a buy. Price goes very, very closely, retraces back down. So what happens this specific area? Very, very close, but rejects back down. I'll take it as an inducement. I've taken a few trades like this before. It worked out very well. Inducements is inducing buyers to come into the markets, and then you can kind of say tricking. I wouldn't say the exact word is tricking, but yeah, you can use tricking. So it's like tricking you to buy, but then price just retraces all the way back down, and this is what happens. I start to look for another buy entry. This is an area I'll be looking to buy again to officially clear out the liquidity. Because inducements, I'm expecting price to in the future hit right back up. So you guys can actually Google on it, what is inducements. You can write smart money concepts inducement. What is it? You can ask Google, you can check maybe ChatGPT, maybe ChatGPT knows it. So yeah, you can actually place your take profit target maybe 1 pip below. That's what I usually do. I usually set 1 to 2 pips before the liquidity hotspot, but most of the time, if I'm being honest, it's just 1 pip. 1 pip before the resistance area. So yeah, this is actually very, very useful. So yeah, please screenshot this down before we continue. So Jack actually asked trailing stop. So I do not have a MetaTrader here open on this computer right now. Do not have it on this system. So Jack, let me answer your question. Okay, I just sent the thing already. I just sent the link already. You can actually check it out. Unfortunately, I do not have an MT4, cannot demonstrate to you. Next, a proper stop loss and take profit placement. So first, major resistance area, same thing, 3 taps. Wow, very, very nice. You start to draw a box or something, a nice box, then you start to color it red. It's a resistance area. Major support, 3 taps, start to draw it out and put it's a major support area. So what can many traders see? The moment I look at this, what do I think of? It's a consolidation. To me, it's a consolidation. I do not like to trade within a range. I do not like it to wasting my entire day. It will be frolicking around, not doing much within that range. So what I like to do, I want to wait for price to officially break out of that range, you know, clearing liquidity, sweeping up all the liquidity before reversing back up and continuing to my take profit target. Does it have to be 3 touches the minimum or on support or resistance area? Well, if you are drawing a trend line like this, let's say if it's a trend line sideways, you need minimum of 3 touches. So 3 touches actually helps to confirms is a strong support, strong resistance area. So for me, I just see 2 touches. I still use it because if you can call it a intermediary support, intermediary resistance. Those areas are important. So maybe I should open the trading view, show you an example. Okay, nice. Euro dollar just hit. Okay, let me create out. So even in a scenario like this, to me, it's still an overlap. This is an overlap resistance. So we have 1 tap, very nicely, even 2 taps, I still will be using it. But 3 taps, you know, make me more confident that indeed it is a strong overlap resistance. So for me personally, I'll take it as this area is 2 taps, price still reflected out and continued heading back down. So likely a possible scenario we can see happen is because since price has retraced back up, rejected the overlap supports. So what do we have? Something like that, you can enter price. Likely if price breaks this low right here. Okay, let me get it out. Price breaks this low right here, retraces back up. Potentially you can look for shorts to the downside. Since just now I already mentioned euro dollar on the daily chart, it's very bearish. Okay, Summit, you asked, it's great to know more about the company website. Okay, the forexarmy.com. Well, it's an education sector of the company. Okay, next, let's move on. A dynamic take profit placement. Okay, let me just find out what this thing is about. Okay. Okay, I don't think this is important. It's not the same trading idea that I'm using. Okay. Okay, this is quite a nice example. So most of the times, some traders, I mean personally, I still put my stop loss at the previous swing high. No, I don't expect price to actually clear out that area. So in this specific scenario, just as Desmond, so our chief trader Desmond actually likes to put his stop loss slightly above the previous swing high, just in case price actually goes back up to what will it do? Likely to clear the liquidity, the previous swing high before continue going back down. So for him, he plays it safe. Stop loss slightly above, so maybe roughly 5 pips above, just in case price clears the liquidity. I know recently he's been opening up, learning more about smart money concepts. He's been implementing the liquidity concepts, implementing equal low, equal high into his Nike tick strategy. So it's actually working out pretty well for him. He's combining different strategies together and build his own formula for trading. So notice price hits back up. So in this specific scenario, we notice that there is a confluence area, the negative 27.2% and 61.8% Fibonacci line. So it's a very, very nice line. You can expect price to hit up there. So you can increase your stop loss to slightly above that area, because you know price is going to hit that area. Enter sell entry. Stop loss didn't get hit. It was relatively close before it continued down towards the take profit targets at the previous swing low. Okay. Okay, so far any question, feel free to ask me. So we actually have more time than that. We actually have a very, very nice 25 minutes left. Okay, all's good. Very, very good. Okay, if there are no, okay, I'll give you guys some time to ask more questions. So in the meanwhile, so I think I showed a few people already. So a few of you guys actually have been following me very, very closely from webinar to webinar. I appreciate the support. So I'll just show you guys a very nice analysis that I did that I actually followed. So this is my personal trading view. So I actually did an analysis this week on Monday. This is a trade I took. I was saying forecast for euro dollar on the Monday. Then I explained some little fundamentals, that can affect the traders' sentiments. Okay, sure. We can do live analysis. Why not? Since we have more time. Any questions, just ask me. If there are no questions, I will start to move on towards the live analysis. So yeah, this was an analysis that I took. So I actually expected price broke of structure, expecting price to retrace back up slightly before heading towards that overlap support. Okay, May, you actually asked, are these recorded and available? Yes, definitely. So it will likely take, I'm not really sure on it, but I'm sure I'm very, very certain that this webinar is recorded and will be likely uploaded to YouTube in about 1 to 2 weeks time. So you can actually look at a recap on it. So as I was saying, I like to use a lot of confluence to my trade. So you notice I actually write out relative equal lows. Relative equal lows. So that is a liquidity hotspot. Next, larger time frame on the daily chart, price just tapped into the 50% fib and rejected strongly back down. So there's also a 61.8% golden Fibonacci ratio. I drew it from the bottom to the top. And what happened? Price actually went in. It just tapped. If you look very, very closely, it just tapped very nicely into my 61.8% fib ratio before it bounced right back up. So at these very moments, I would not want to be looking for any more trades at the moment unless price possibly breaks below the 61.8%. Then I continue my sell to the downside, or if price breaks above 1.075, I can start to look for longs towards the upside. So may you ask whether is that on the IC market YouTube? Well, yes. So let me get this IC markets. So this is the IC markets YouTube channel. You guys can subscribe to it. I'll send the link to the chat. Okay, so yeah, I can see. Okay, it's a bit funny, but I'll get it updated. So for the past few webinars, it was actually my face, but Jindal was presenting. So something like that. So you actually see Jin presenting. So yeah, the webinar, this recording will be uploaded to this YouTube channel. Okay, so Rojin, you actually asked, by the way, you actually said, by the way, the next week webinar link is direct to this webinar registration. You think the link is not updated? Well, for this, I think you got to ask the helpline, email IC Markets, or if you are inside the IC Markets VIP channel, you can directly approach Desmond. You can actually ask him. He'll be glad to answer and help you out. Hey, no problem, no problem. Okay, next. So yeah, this just a few analyses that I did. Not much. I actually had a potential, and then price actually went up higher before hitting my take profit targets. I only like to post things that are pretty accurate, I do not like to post things just for the sake of content. What is the point of forcing a content on TradingView, posting ideas just for the sake of followers, just for the sake of all these boosts? Only exact ones. Okay, so this another one, DXY price. Okay, I'm not sure why it's not updated, but price continued to move back up higher. This another one, expected 50% FIB with explanations clearly written out. Price hits and then it reversed. Okay, so May, you ask, how do you draw a Fibonacci correctly? Hey, no problem. No problem at all. This is a learning webinar. Everybody feel free to ask questions. Just take it as it's a relaxed chat session. Talk to me as if you are talking to a friend. Do not take it too formal. Okay, how to draw a fib? Let me find a nice one. Okay, looking at this bottom, at this swing low right here. So what I like to do is from this swing low towards the recent swing high. I'll be drawing the fib. So the Fibonacci tool is from the number 3 from the top. Click on it, fib retracement, drawing from the bottom to the top. And then I'll just have all fibs out. So notice 61.8%. Okay, it's very, very close. Almost there. About 7 pips away. Well, we can get there tonight, hopefully. Okay, you asked whether is it on the daily time frame. Well, it's actually on the 4 hours time frame. So I use multi-time frame analysis since on the 4 hours. I'll just show you an example how I analyze now. Since my target right now, I have a point of interest 61.8%. To not make the chart messy, I'll just leave it as that, 61.8% on the H4 chart. Next, I would actually move down towards the 1 hour chart, start to find for any possible retracements that I can actually get in. Same thing, drawing from the bottom, from the top of the swing high towards the swing low right here. I want to know where price actually retraced. So I'll be drawing from the top to the bottom. So if I'm not wrong, it should be 38%. Well, roughly there, very, very close. Okay, actually very nice, just right. 38.2%, and it continued moving bearish. What next? I would be looking for the next possible retracements, preferably 38.2%. So let's say price steps into the 61.8% area, and then we have some sort of funny market structure shift, then you start to buy towards the upside. So as price inches lower, I'll be dragging the Fibonacci down. So I'll try my best to aim for at least the 38.2% Fib level on the larger time frame. So in this specific scenario, let's say if I called it, I'll be aiming for around 80 pips, 90 pips, like an intraday kind of trade. So yeah, now 1 hour time frame, then I'll start moving down towards 15 minutes, 5 minutes, trying to find a nice entry. Okay, so as I mentioned earlier on, the 61.8% Fib is my take profit target. Is a target that I'm actually looking at. So with price actually breaking structure right here, obviously we need to have a retracement. So I'll be drawing the Fib from the swing high towards the swing low right here. So on the top towards the bottom, just have all Fibs shown. You notice that price tapped very nicely towards the 78.6% Fibonacci level before it continued moving. Likely might continue moving bearish. I would not say will, likely might. Okay, so 78.6% just to make it clean. What happened? Price then had a nice market structure shift. So right here kind of broke structure. So I'll start to draw the Fibonacci line from the top to the bottom. I want it to at least clear one of the levels. At least 38.2%, 23.6 are not that much. I'll still be waiting for price to retrace up. So yeah, at least 38. I don't like it when it reaches 23.6. So likely what I would do, wait for retracement. 38.2 and it rejects one more time. Likely I would take a short tonight. A short entry, stop loss above here just to be safe, or if you want to be here also can. And continue aiming for the 61.8% Fib level on the H4 time frame. So this specific setup, let's say it works out well, it would be roughly only 19 pips. It's not bad for a scalper, it's quite a lot already. So I think if you actually took this kind of trades, waiting, have patience, can actually be kind of profitable in the long run. So I like to think that teaching trading and understanding trading is easy. So maybe I wouldn't say it's that easy. So maybe someone takes their time, sits down 1, 2 years, 3 years to learn everything they need to know about trading. But then what stops a trader from being profitable? I know many people actually struggle with it. So what you can do is your psychology. It's all inside your mind. Everything is inside your mind. When you hold a trade, you start to be nervous. You start to think, is my trade going to reverse? Or is it heading in the right direction? And then when the trade is in a minor, yes, definitely, it's ourselves, Charles. You're right. The problem is ourselves. When the trade, you enter a sell, then price moves up slightly higher, about maybe negative 3 pips or 5 pips. Your heart starts to beat fast. You start to be very nervous. You start to close out your trade early because you do not want to hit your stop loss. What happens next? Most of the time, I've seen that happen. The trader get very, very nervous, close out in a loss, and then price starts to move in the proper direction. Okay, Desiree asked whether I can put the SL in this estimate so you can roughly see the RR since the TP is 19 pips. Because you also do small scalps like this. Well, let's say take a short here, stop loss above, aim towards the downside, 1 to 2 risk to reward, risking roughly 8 pips. Let's say it works well. So you notice as price starts to move down, let me clear this out. As price starts to move down, I'll be adjusting my Fib. So every time it moves down, I'll be adjusting, moving lower and lower. So every time it moves lower, I'll just adjust it until I wait for price to retrace back up. likely to continue bearish. So Jack Zola. Okay, I answer Jack Zola question first. So he actually entered gold. Okay, let me check your gold trade. I've just seen you showed your stop loss, entry, and your take profit targets. So let me move on towards the 1 hour chart. Entry at 1962. Well, that is a very, very good trade. 1962. Wait, hold up. I don't think your entry could be 1962. The maximum was only 1959. The entry was only 1959. I think you might want to check your entry again. Please check on it. Yeah, your entry there was no entry on the 1962 level. So May actually ask, could one scalp around the Fibonacci levels following the trend of course? Well, definitely, that's what I'm actually doing. Roughly what I'm exactly doing. I wouldn't say exactly. So move down 1 minute time frame. So you can start to look for, okay, let me pull this out. Clear these areas out. As I mentioned, just now drawing the feed from the top to bottom, I will start to at least, especially such a massive drop like this, I usually expect price to likely retrace towards the 61.8% golden fib level. So what I want price to form some kind of rejection, market structure shift. I usually want a very, very strong rejection. So what happened? What happened here? Price tapped very nicely towards the 50% fib. Well, it did reject, but why would I not enter this trade? Why? Although it's a very nice 1 minute double top, wow, price can continue going down. Well, I do not look at retail patterns. Price actually broke structure right here, and then it retraced back up. So this is the first rejection that I'm looking at. Well, I always look for 2 confirmations to my trade entry. So my second confirmation would be if price breaks down further, then I will take the retracement, sell, stop loss above for price to continue bearish. So I always aim for 2 break of structure. So in this specific scenario, price actually reacted strongly towards the 78.6% level. What do we have next? We actually have a very nice market structure shift right here. Market structure shift right here, price went back up to clear some sort of, okay, there's a nice 5 minutes fair value gap right here. And then price once again decides to break structure. So it is very possible. So right now it's out of my trading timing. I only trade during the London session. So right now is after the London session, I'll not be trading already. So the London session actually ended here at 6 p.m. Singapore time or 5 a.m. New York time. So if you want to enter a trade, I will not advise, but at this moment, since price broke structure twice, I would possibly enter a trade, stop loss above, and aim for price towards the downside. But it's out of my trading rules, so this is why I'll not be entering. Same thing, draw a fib from the top towards the bottom, likely trying to enter at the 50% discounted area or either the 38.2%, which we are in right now. Okay. Oh, Jack Zola, you entered on the 1-day chart. Well, even on the 1-day chart on Go, I don't think there's a 1962 level that was hit. 1962. Well, there's still no 1962 level. The highest was at 1959.77. Okay, not sure why. It might be your broker might have different. Are you using IC markets? Don't think there was a 1962 level. It's 1959.770. Okay, no problem, Desiree. No problem. Discipline is very, very important in trading. Yeah, especially stress-free for sure, for sure. So yeah, this is why I actually am aiming for a very, very small percentage. I know that, if you want to make, just be very, very realistic here. A lot of traders, they like to have a $10,000 account. What do? They try to flip it, try to make $2,000 out of the $10,000 account. So this is something that I personally do not like to hear, because making $2,000 on $10,000, it's 20% return. 20% return is a lot, man. It's really a lot. So most hedge funds, those large institutions, they only are making roughly maybe 8% or so a year, maybe 10% a year, who knows. For me, I personally aim 1% a week. Why? I know 1% a week, let's say you are using $1,000 account, it's only $10. But what happens? 1% a week, 4% a month. You are very, very consistent, only aiming for 1%. What happens after that? On a 100K account, I'm just giving an example. I know most of us, we don't have the capital, but if you manage to get the capital, manage to show that you are very consistent even on a small account, you can try to get funded, try to get someone to fund you, you share some kind of profit split. So 1% a week, 4% a month on 100K is equals to 4,000 USD. Is already a lot. So it's roughly, I don't know, in Sing dollar, the updated rate it's 5,300. So I'm just giving SGD. So there's another term you can actually look at. So this is consistency that I'm aiming for. That's the reason why. 1% a week, 4% a month. Okay, Jack, you said about the entry at 1862 level. Are you in a buy or are you in a sell? Okay, you're in a buy, 1899. Okay, well, you enter a buy right here. I personally think that price might continue bearish because it's still very, very strong. Bearish momentum is still very strong. I do not expect price to head up to this overlap resistance anytime soon, because at the moment we actually have a pretty nice daily demand area. Pretty nice daily demand area. I can possibly expect price to continue heading down and clear out that area. So the price is like a magnet. We also have pretty much, I think, relative. So much liquidity is just building up right here, looking very good to be cleared. So I'll likely see price just continue bearish towards the New York session, likely. So you enter at 1962. Hey, no problem, Moses Richard. Hey, thanks, man. Thanks, man. Yeah, good stuff, good stuff. Hey, you too, have a good one. Have a good day. Take care, take care. Hey, bye, man. All right, so you enter at 1962. That was a very good entry, actually. Very, very nice entry that you actually did. Perfect. 1962. Let me check. TP18. Wait, let me check. Entry 1862. So you're roughly up 100 pips already. So yeah, if you are managing your trade, I would advise you to likely close partial. I do not like to hold trades for very long, just in case I lose out the entire 100 pips. Okay, nice. You actually have one and take profit at 1899. So not bad. You have a nice overlap support area. So 1900 would be nicer. Okay, 1989. Okay, not bad. The entire area, you can likely take profit at 1986 already. 1896. So if best fit line, it should be 1900. Okay, hello Yongzi, how much do you risk per trade to achieve 1% per week? Usually, do you only take one trade at a time? Yes, 100%. I only take one trade at a time. So I do not have my phone with me. I will be glad to show you. So in any webinars, let's say if I have my phone here, I will openly show you guys my MetaTrader 4 accounts, because I do not like to hide things. I do not like to preach things that I do not follow. So I tell you guys about trade management psychology, but wow, behind the scenes, what if I'm a very, very lousy trader? So whatever I'm talking is, no one will listen to me or, learn. So I only will say things that I do follow personally. So in the next session, my phone is outside charging. So in the next session, my phone is here. I will show you guys my MetaTrader 4. So I'm very, very open. This entire year so far, I've took 17 trades since January, only 17 trades. And I've only lost one single trade. So my win rate is roughly 91% using purely smart money concepts. So yeah, I risk 0.2% per trade, 0.2% per trade, 0.2%. So every day, so like yesterday, I got 0.3%. Today, I got 0.3%. I only need 0.4% more. So I got Wednesday, Thursday, Friday, and tonight to get the remaining 0.4%. Okay, no problem, May. May said that was a really great session. Thank you so much. We'll definitely be looking at the YouTube from all the learning resources. So yeah, I'll show you the win rate. Okay, May, that's a really amazing win rate. Well, I've got Jindal to thank for. So I'm very honest. Last time my win rate was very bad. I had a roughly 30% win rate. But last year, Jindal actually sat down and he asked me, why are you losing trades? Why do you actually take this trade? Why do you take that trade? We actually took some time to, and he actually helped me to diagnose my trading strategy. He actually fixed it, in fact. So that's the reason why the win rate now actually went up to 90%. Why do I not want to do 1% risk, which is the norm? Well, 1% risk. The problem with 1% risk is that if you are managing large funds, let's say you are managing $1 million, those hedge funds, they do not risk 1%. 1% risk, they risk way less than that. $1 million accounts, will you be risking 10,000, US dollars, Sing dollars on one single trade? And if you hit your stop loss, everything is gone immediately. 100K, 0.2%, I'm only risking $2,000 per trade. So Jen Bunnies asks, yes, actually, I take 2 confirmations before I take a trade. Is it only for small 1 to 5 minute time frame, or do I need 2 confirmations for 1 to 4 hour time frame? Well, on the larger time frame is what if 1 to 4 hours time frame break of structure one time, I immediately look for a sell. I do not wait for a double. But if 1 to 5 minutes, I usually wait for a double confirmation because I'm scalping on a smaller time frame. It's very, very important. All these are important. Double break. Brandon, you asked whether can I post my trading view name and link here. So I will send that link tree again about myself. So I just sent it to the chat already. Hey, wait, so sorry. I'll send the other link. Wait, give me a moment. Okay, let me get it out. Okay. Okay, check this out. Everything about me is there in this Linktree link right there. Okay, feel free to follow me there. Click on the LinkedIn profile. There's the other link. You can click on it. It will lead you to my trading view profile. So from there, feel free to check it out. I have a YouTube channel. I have Instagram. Feel free to check everything out. Follow me. Do follow me also. Hey, no problem, Rojin. Yes, very good session. Remind important trade management. Well, definitely trade management and psychology is very important. Okay, no problem, Brandon. No problem, Simon. Okay, all right. So I'll be ending the session already. So I really appreciate you guys for joining, giving me the support and staying till the end of this session. So yeah, hopefully I'll see you guys next week on IC Markets. Once again, feel free to chat me up inside the VIP room. Hey, you guys have a good week ahead too. Hey, goodbye. Take care. I'll be ending already.